Hey, welcome all, and let's see, welcome everybody, and welcome. Who are we looking at here? 1 second. Sorry, can't do two things at once, and I was trying to get an invite out. Okay, welcome everybody. Sorry about that, and welcome network marketers. And this is, and those of you who are thinking about potentially becoming a network marketer, you are in the right place. Why? Because did you know that when you take out all the time that you spend sleeping and all the time you spend working and all the time you spend commuting to work and all the time you spend running around doing all the things you have to do, that at the end of the day, most people, probably you too, have but 1, maybe 2 hours to yourself to do the things that you like to do. And even if you had more time, would you have more money, or would you have enough money? We have a system for you to own your life by building a home-based business. And it is so simple that anyone could do it. And the best part, no selling, and it doesn't take very much of your time. That is the core of successful network marketing right there, the 45-second presentation. I'm Paul Romero, and I'm hanging out from Lake Tahoe on, oh, wow, it seems like it's brighter today. And who are you? We want to know who you are. Let us know. Type it in. Let us know where you're hanging out from. We love to see who's hanging out on these calls with us. And I have my sponsor here, John Leister, hanging out with us today. Where are you hanging out from, John?
Very rainy, Seattle-like Phoenix, Arizona. It's funny. I love Phoenix. I came here for one reason, because of the weather. And I was reading an article yesterday how because of all these hurricanes and things that are in Southern California, we can expect Seattle-like weather in the Phoenix area for the next month. And I'm like, well, that just sucks. I mean, I like the rain, but it's been like 4 days in a row. And I mean, it's been brutal. But anyway, you called me this morning. I've been reading, speaking of, us finding a system to work from home and make lots of money. I was actually reading an interesting article about a network marketing organization, which I'm not part of, in a magazine called Success from Home. A reason I bring this up is because the name of this hangout today is, what better time than now?
No. How can you say gold is good when the price is so low?
Oh, okay. I was looking at, I guess, the title for the next one. I apologize. But,
same concept, though.
One of the reason I bring up the magazine I was reading, and I'm glad you said, what our system is and what network marketing is, and that's what we're specifically talking about here today, is that home-based businesses are a trend right now. Meaning it's not a fad. It's not something that's going away overnight. It's something that's trending and growing. And more people are getting into home-based businesses now than any time in U.S. history. And a big reason for that is because there just aren't any good jobs out there anymore. And people realize that, I think, are really beginning to realize that the only way kind of to move forward, have any sort of real security or economic security, is to create something or be part of something that, quite frankly, is a little bit outside of the main economy. With any job you have, if it's a Circle K, a McDonald's, a retail store, a corporate job, whatever job you have, there's no security there. It's all at the whim of what's going on in the economy. That's why Success from Home magazine, talked about this a little bit in an article in this latest issue I read, and just people working from home is such a growing trend because it gives you the opportunity, it gives you the ability to create your own economy and not be subject to what's going on out there in the world. Yes, that stuff always has an impact. But if you could figure out a way, something creative, something different outside of the normal everyday 40-hour-a-week corporate cubicle job or flipping the burgers or pumping the gas. Where was I going with that? I apologize. Thoughts kind of got jumbled there. But, yes, we're subject to that stuff. But if you're just going through with the old way of doing things, if this economy crashes again like it did in '08, where are you going to be? You're going to be stuck. That's why now is a great time to get involved in network marketing. And to go along with what Paul said there about the actual title of our hangout today, what better time to start if you are in a position to save money? How are you saving money? Where are you putting your money? And what are some good ways to protect your cash? Because if we do have another crash, we already have the inflation. It's just going to get worse. The value of our dollars in our pockets are just going to devalue further. So what is out there for you guys right now to get involved with to protect your cash and start creating your own economy? That's the question to keep in mind throughout today's hangout.
Yeah, your own economy, especially. I just want to point out that today is a very special Hawaiian shirt day, because this is this is why it's not buttoned. I can't button it because this is the very, very first Hawaiian shirt that I ever bought in my life back in 1979. I just reached into my closet in the dark today. I just felt it. I grabbed one that I knew. Yeah, that's a Hawaiian shirt. I know what it is. This just happened to be what I pulled out. So I don't know why that happened. There's got to be some specific reason why we're going back to 1979 here. But anyway, what you were just saying there, John, about the jobs that you could be working and whatnot, and creating your own economy. And it goes farther than just like those jobs that kind of like you were mentioning. I mean, it seems today that the two things that people feel like looking especially like at college students and whatnot, that or people that are going back to school especially, is like the government jobs and the medical field are like the big this is where there's security in the future. Nothing is secure. The government is not secure. Medical field is not secure. Even if you're in a professional business, if you're working for somebody else, I mean, if you're an accountant or an attorney or whatever, if you're working for somebody else, you're limited. I mean, at the very least, you're limited. There's a cap on your income. Somebody else is dictating how much money you can make. When you have your own home-based business, the only person who's dictating how much money you can make is you. And that's the power behind, and that's why so many people are getting into home-based businesses nowadays, because they're taking their life into their own control, and that's what their finances under their own control. It's all up to them how successful they're going to be. So, getting to how can we say gold is good when the price is so low? There was an interesting Facebook post that I saw the other day. I just want to read what this said, because it was really, really pretty interesting here. This was by a real estate guy that we know, but he just wrote here. It ends. He says there are so many experts predicting a very bad year for the stock market. On one very accurate prognosticator predicts that the market will dive to 1,150 by the end of the year. That means the average IRA or 401k will lose approximately 30% of its value. Even if he's half wrong, just half wrong, that'd be devastating to many Americans. Most financial advisors will tell you that you need to diversify, but they'll buy different types of securities, stocks, bonds, mutual funds, annuities, but they're all part of the same system. Open your mind and self-direct your IRA accounts today. He says here that real diversification means investing in different asset classes: cash flow, real estate, notes, partnerships, oil, gas, gold, silver. This is real diversification. He says oil hit an all-time low. The day before I don't sell high, right? I mean, if oil's at an all-time low, what are the chances are it's going to be higher in the future? If the stock market was at an all-time high earlier this year, what are the chances that it will be lower in the future?
Yeah, I want to throw in another asset. Speaking of diversification, you didn't throw in there cloud income properties, internet-based businesses that you can invest in. That's another one. And network marketing companies that create a passive income when you build your downline, such as the one that Paul and I are involved with. However, I don't want to get off the topic of where you're going there, Paul, because I read that same post, so I know exactly what you're talking about. But that's very interesting to think about is where the mainstream financial advisors, their definition of diversifying is just a diverse portfolio of stocks. That's not diversification at all. Diversification is owning different assets in different asset classes. Yes, stocks and bonds, that's a strategy, that's an avenue. Cloud income properties, websites, that's pretty soon going to be considered its own asset classes, web-based businesses, web-based investments. You've got cash flow, passive rental real estate income. And then there's net income that you can create if you're selling life insurance, residual, or income you can create doing network marketing. You know, there's other things. So diversification is about getting your fingers in a lot of pies. But I'm not diversified if I'm only in real estate and I go, I'm diverse. I have a single family, a mobile home, a manufactured home, and a multifamily. I'm pretty diverse, aren't I? No, you own real estate, all the same thing.
Yeah, market crashes in the real estate, they all go south. You know, it's not like if the market crashes, only the residentials go south. They all go. You know, that's the whole thing. Funny thing too. I was watching an old movie the other day from the 1940s. This movie was made, right? And this guy is talking to this couple who's about to get married. They supposedly have some money and whatnot, and he's trying to get the guy to invest in his business, in songwriting. And he's like, oh, I don't know about that, you know, yada, yada, yada. And the wife says, well, you know, we should probably invest in some of those stocks that Jimmy was telling us about. And the guy, he looks at the guy and he says, you know what? He says, you don't want to invest in stocks. That's like putting your money on the roulette wheel. This was in 1940, okay? Wake up, people. It's still the same. It's the freaking roulette wheel out there in the stock market. Come on, get into something else.
Get into something else. I'm not saying don't invest in the stock market, but know what you're investing in, have a strategy to enter and to exit. You people with the 401ks with no stock market trading experience or understanding of how the market runs and works. And I'm not going to sit here and pretend to be a professional on how the market runs and works. I know enough to put my money in places that I understand, and I don't understand day trading. And I know right now it'd be really stupid to have a diverse stock portfolio and purchase a whole bunch of stocks that are completely overvalued. That's the point of a lot of what you're hearing right now about this upcoming stock market crash, is because it's extremely overvalued. Why? And then ask yourself, okay, relate this. Why do people get screwed? Why did so many investors get screwed when the real estate market crashed? In turn, why do so many people get screwed every time the stock market crashes? Because they're tying all their wealth, all their income, all their wealth, all their savings are not diversified if they're only invested in one asset class. So the reason so many people get hurt with real estate and then real estate gets a bad name, or so many people get hurt investing in the stock market and the stock market gets a bad name, is because they're all in one asset class. You're not managing your own money. And then when that asset class experiences a crash or a setback in pricing, well, everything you have is invested. You're not directing your funds in a 401k. You have no idea how to get your money back out of the market, so you just lose it all. Same thing happened in the real estate. This is a network marketing hangout, so why are we talking about these things? Because this just relates to why it's so important to get involved with educating yourself about all of this stuff that's going on. Because when you do make your $1 million in network marketing, what are you going to do with that money, right? You want to know a little bit about investing and what to do with it. But another little interesting thing, and we're going to probably talk about this, being that we are our specific network marketing organization, the one that Paul and I are involved with, is Swiss Gold Global. It's about it's about gold and silver at wholesale prices, buying and selling, saving, and using a web-based banking type software to manage a gold and silver account at prices that the average person can't get into gold and silver. But if you're in the habit of
plus two, outside of the banking system, within private reserves where it's safe.
Yes, true diversification. Because if you do, let's just say you do have a self-directed IRA and you have bought some gold and silver U.S. coins that are silver or gold, are the only coins allowed to be purchased and stored and saved in an IRA. There's a reason for that, because as a U.S. coin, you aren't actually the owner of the gold and silver. You are a legal bearer of that coin, which means that you're subject to changes in law. If they decide they want to confiscate all those coins, which they did back in the Great Depression time. So keep that in mind, that this is a real thing that could happen in the United States of America. This isn't fiction. This isn't, oh, this can't happen here. It's something that has happened here. Quite frankly, if we get to some more of the information that Paul and I are thinking of getting to, you'll understand that it's very possible that it will happen here again. So you guys with your self-directed IRAs, with that, all right, I'm diversified. I got my gold and silver, but you're owning your gold and silver still within the same system that is tying to 401ks and stock and everything else. What happens if you do lose those coins? You'll get an exchange of something. Government just can't take it, but they're going to exchange it for some cash maybe, or some other something of lesser value. That's what they did in the Great Depression when they did the confiscation. So Swiss Gold Globals offers the ability to own gold and silver outside of the banking system, because there's you know what? I don't want to get into a whole discussion of how and why, but it's just an alternative way to buy gold and silver that's outside of the banking system. So it's a further diversification, a further protection from economic failure, the crash of the dollar. And the reason I bring this up is because you might even be watching this going, well, I'm looking at isn't silver at the lowest point in 12 years? Yes. But why would you want to buy it if it was at the highest point in 12 years? And
That's exactly it. Here's a little graph that I drew up this morning real quick. Let me show you this.
Yeah, go for it.
Gold in the 80s, right? Gold flatlined for a lot of years around $400 an ounce. Sure, it fluctuated, went down into the 200s, up into the 500s, right? But here's what we're looking at here: $400 an ounce in the 80s. Yeah, it went down into the 200s and then shot up into the 500s. What happened in the 80s? Right, we had the S&L debacle, right? Real estate was going up, and then the S&L crash and all of that. And so, right before the crash, it goes low. The crash, when everybody's losing all their money, it goes high, and then afterwards it flatlines back out at about $400. In the 90s, you had the same thing with the dot-com bubble. Before the dot-com bubble, when it started, things started getting hot or whatnot, the price of gold went down, then it started going up as things got hot, and then all of a sudden things bust, the bubble bursts and it shoots up into the sky, and then here we go again, 2008 and 2006. Price of gold started going down. Prior to 2000 and like 2003, and then it started going up with the housing prices and everything else, and then all of a sudden, once the market crashed, here we are in 2011. That's when it peaked, when everything was at its worst, and then this time when it settles out at $1,200 an ounce. Now here we are going into 2015, and what we've been floating around $1,200 an ounce until just this last 6 months or so, started dropping down. You see a pattern here. And here's the big thing. This is the reason why gold and silver is so important. Flatlining for decades at $400 an ounce, approximately. Now it's settled out at $1,200 an ounce. The next time when it rises, it's going to settle out up here somewhere at maybe, who knows what, $5,000 an ounce or something. Gold is not for these periods of time right here. I mean, sure, if you want, you can sell off a little bit when you think you're at the peak and make a few bucks, but you still don't want to sell it all. Gold is for the time when you're buying at $400 an ounce through these decades here, and now you can cash out at $1,200 an ounce, 4 times what you had. If you invested $100,000 in gold 20 years ago, you've now got damn near $500,000 in gold. Okay, how would you be sitting in today's economy with $500,000 versus where you were sitting in the economy back then with $100,000? Your position in life would be the same. You don't lose value in your life. That's what gold and silver is all about.
I did want to point out, can you hold up your graph one more time? Okay, so you see where throughout the 80s, 90s, gold was at about, maintaining, 400. It was probably slowly creeping its way up a little bit. Like as Paul shows, and it has its peaks and its valleys, and then it's straight line flow. That's about the value, $400 throughout there, rising slowly. And you see right now where we settled on 1,100. Right now we're settled at about $1,100 on gold for the last couple months, $1,100 to $1,200. That $1,100 to $1,200 where gold is settled right now compared to where it was settled 20, 30 years ago, do you think that if you own the same 5 ounces of gold you bought for $400, that you're richer today because your gold is worth $1,200? No, actually, because of inflation, your gold is buying you the same amount of goods and services as it did 30 years ago. That's how much inflation has occurred. And that's why Robert Kiyosaki says savers are losers, because everybody who said saved that $400 in cash in 1980 and has that same $400 now has a lot less buying power, purchasing power than they would if they bought the $400 ounce of gold rather. In fact, they'd have the same purchasing power in today's standards as they would have in 1980 with that same ounce.
Yep.
He didn't gain, but he didn't lose. And that's the point here. It's a hedge. It's a protection of your money. It's a way to protect your money. And right now, just to get into it real quick, because it's already 8:20, poor man's gold, silver, it's below $14 an ounce right now. And I started thinking that was interesting because just a few years ago, it had hit $55, and then it was peaking or kind of stagnating at about 30 to 35, and then it dipped down. Here we are, since 2013, 2.5, 3 years later from 2013, where it was kind of hanging out in the 30s, we're $20 less now, and people are getting out of it. They're saying, "Oh, silver's over. Get rid of the silver, yada yada." And so my thinking is, again, we have sort of a correction and a plateau. If you look at the relationship here, silver was about $3 an ounce in 1980. Now it's kind of hanging itself out at about 15. 15 divided by 3 is 5. So it's worth 5 times, and that's a complete accurate account. That's about the rate of inflation again. It's about 5 times more than what it was 30 years ago, has the same purchasing power. That ounce of silver has the same purchasing power as it did 30 years ago. And the relationship to gold's the same. It's about 3 times. Gold is 3 times the price it was in the 80s right now, and silver's about 5 times. Here is the interesting thing. When silver is being sold at $35 an ounce, the mining companies are making about $8. Yep, same flow, same pattern. The mining companies at $35 an ounce make $8 of profit off each ounce of silver pulled out of the ground. So if you take away their profit, that's $27. $27 an ounce is about what it costs. And I have this article I read that breaks down all the costs of mining when it comes to paying your miners, your research and development, all your equipment, your utilities, your taxes. You pay your management and your CEO and the ownership of the silver mining company. It's about $27 is the cost of doing that. Now there's a sliding scale. They can cut back production. They can cut back employment. They can cut back salary, bonuses, and things down to where they will break even at about, they can manipulate their business through layoffs, put it that way, to make money at $20 an ounce, to maintain itself at $20 an ounce. Anytime silver is being sold below $20 an ounce, it actually costs a mining company more to pull it out of the ground than it costs them more to pull it out of the ground than they can sell the ounce for. What that means is that right now at $14 an ounce, you can buy it cheaper than what it costs to pull it out of the ground. So what's the incentive for mining companies to mine silver right now if they're losing money doing it? Well, the answer is there is no incentives. So what happens in a period like this? Bigger mining interests, bigger banks begin to buy out all the small mining operations. This is why I think this
same thing is happening with oil.
Same thing with oil. They buy up the smaller companies. And then what happens is they've cut silver production by 5% year over year over 2000 since 2013. You go, of course, the demand's less, but so they're producing less because there's less of a demand, so they don't need such a big supply, which is true. However, if you take the time to look at this stuff, the demand for silver hasn't actually decreased since 2013 because it's an industrial metal as well as a monetary metal. So the industrial applications of silver actually have a higher demand now, and year over year, the demand is increasing. So the supply of silver is actually being cut by mining companies by 5% year over year, compounding for the last 3 years. Now the prediction is silver has been artificially priced low. Smaller companies have now been bought by bigger companies. And on top of that, mining companies have cut their production. What this is going to create is a situation in about 3 to 5 years. This is what's being predicted in 3 to 5 years, to where the price of silver will skyrocket because now there's not enough supply because they've cut production, and it's a consumable metal, which means it's being used up. Very interesting stuff to look at. I wish we had more time to really break down what this means. Yeah. But the basis of this is, hey, you know what? If you're putting money in a savings account and you're only earning 1/4 or 0.5%, you may want to consider diversifying some of that cash you're saving into a precious metal like gold and silver, because we're at the historic low for the last 12 years. What better time to diversify and invest in this asset class when it's at a low point rather than a high point? So with that, I'm going to toss it back to Paul to kind of close us out.
You know, and I mean, how can you say gold is so good when the price is so low? It's the very simple age-old adage: buy low, sell high. I mean, that's what it's all about. It's low right now. You should be buying gold. That's why it's so good right now, because it's low. Anyway, with that, oh universe, I ask not for more riches, but for more wisdom, with which to make better use of the riches given to me at birth, consisting of the power to control and direct my own mind to whatever end I might desire, which is going to be lots and lots of gold and diversification.